Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 146, published January 24th, 2025, titled Best Low-Carbon ETFs and Stocks. It's presented by Investing for the Soul. InvestingfortheSoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Now, I'm having to record this podcast 2 days earlier than usual, but it is still filled with great up-to-the-minute informative articles. Also, remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast webpage for links to the articles and more company and stock information. Today, I'm starting with 2 articles on low-carbon ETFs and stocks from analysts at carboncredits.com. The first article is titled Top 5 Carbon ETFs for Sustainable Investing in 2025. It's by Saptarki S. Here are the picks and brief quotes from the article. 1. iShares Global Clean Energy ETF is a part of BlackRock and a top-performing ETF. Essentially, this fund tracks an index of stocks in the global clean energy sector. One important attribute of this ETF is its strict sustainability rules. It excludes companies involved in weapons, tobacco, coal, oil sands, and Arctic drilling. It currently manages assets worth $5 to $6 billion. 2. Invesco Solar ETF, known as TAN, manages assets valued at between $3 to $4 billion. This fund focuses on solar energy companies such as manufacturers, installers, and technology providers. TAN is based on the MAC Global Solar Energy Index. It invests 90% of its assets in securities, American Depository Receipts, and Global Depository Receipts listed in the index. 3. First Trust Global Wind Energy ETF, known as FAN, currently manages assets worth $2 to $3 billion. Its prospective for those managing wind farms, producing wind power, or making wind energy equipment. However, companies must have a market cap of at least $100 million, a daily trading volume of $500,000, and a free float of 25% to join the index. 4. SPDR, that's SPDR, S&P Kensho Clean Power ETF. Currently has assets worth $1 to $2 billion. It is managed by State Street's Investment Solutions Group and is built for long-term growth. With its focus on innovation and the clean energy sector, this ETF is a great option for those wanting to invest in the future of renewable energy. And 5, Global X Lithium and Battery Tech ETF gives investors access to the booming electrification, lithium, and battery technology sector. Their assets have a $4 to $5 billion valuation. The ongoing global demand for lithium and supply constraints make this ETF a promising investment in this sector. End quotes. Now, this is the second article on low-carbon investments titled Top 5 Carbon Stocks to Watch in 2025. It's by Jennifer L. and also found on carboncredits.com. 1. Brookfield Renewable Partners is one of the world's largest publicly traded renewable energy companies. With a clear focus on clean, renewable energy, Brookfield Renewable Partners distinguishes itself from many of its competitors by operating as a pure-play renewable energy company. This means that its portfolio consists exclusively of renewable sources of power generation, unlike other companies that often combine renewable energy with fossil fuel assets. As of 2024, Brookfield Renewable Partners' diversified portfolio encompasses over 35,000 megawatts of operating capacity across various renewable energy sources. This extensive array of assets spans multiple regions, including North America, South America, Europe, and Asia, underscoring Brookfield Renewable Partners' commitment to global renewable energy development. For investors seeking exposure to the renewable energy sector with a preference for established companies demonstrating stable growth and reliable returns, Brookfield Renewable Partners represents a compelling option. 2. Aker Carbon Capture ASA is a Norwegian company specializing in carbon capture technology. Leveraging its expertise from the Aker Group, a global leader in offshore engineering, Aker Carbon Capture has developed modular carbon capture systems that are both cost-effective and scalable. With a solid financial foundation and strategic partnerships, Aker Carbon Capture is well positioned to expand its carbon capture solutions globally. The aim is to contribute significantly to the reduction of industrial CO2 emissions and support the transition to a low-carbon economy. 3. LanzaTech Global Inc. is a pioneering carbon recycling company that transforms waste carbon emissions into sustainable fuels and chemicals through innovative biotechnology using gas fermentation. Through this process, industrial emissions, rich in carbon monoxide and carbon dioxide, are converted into ethanol and other chemicals. The ethanol produced can serve as a building block for various products, including jet fuel, plastics, and synthetic fibers. With a solid financial foundation bolstered by recent capital raises and strategic partnerships, LanzaTech is well positioned to expand its carbon recycling solutions globally, creating sustainable products from waste carbon. 4. Occidental Petroleum Corporation is a major player in the oil and gas industry. However, in recent years, the company has been transforming itself into a leader in carbon management solutions. Occidental has embraced direct air capture technology, which removes CO2 directly from the atmosphere. In partnership with carbon engineering, Occidental is constructing the world's largest direct air capture facility in Texas, a groundbreaking project that will play a significant role in achieving global emission reduction targets. Occidental's approach is an example of how traditional energy companies are evolving to embrace sustainability. By combining its existing expertise in oil extraction with innovative carbon capture methods, Occidental is paving the way for a future where fossil fuel extraction can coexist with carbon reduction technologies. And 5. Equinor ASA, formerly known as Statoil, is a Norwegian energy giant that has diversified its portfolio to include renewable energy sources like wind power. It has also been at the forefront of carbon capture, utilization and storage technologies for over 25 years. Equinor is a key player in the Northern Lights project, a pioneering initiative in Norway aimed at developing a large-scale carbon capture and storage infrastructure. Equinor has decades of experience in offshore oil and gas exploration. Its deep-rooted knowledge of energy infrastructure is key to its success in developing large-scale carbon capture and storage solutions, with the potential to store the equivalent of 1,000 years of Norwegian CO2 emissions beneath the seabed. Equinor's initiatives are pivotal in supporting global climate goals." End quotes. Still on the theme of energy-related investments is this article titled 3 Renewable Energy Stocks to Buy in 2025 and Hold for Decades. It's by James Brumley and found on Fool.com. Here's some of what Mr. Brumley says about his picks. 1. Cameco, one of the planet's top suppliers of uranium, with access to plenty of high-grade reserves. Its 2 chief mining operations in Saskatchewan, Canada, are currently jointly capable of producing a total of 43 million pounds of high-grade uranium per year. But both could support more output at only marginally more cost. Do prepare for continued volatility from Cameco stock that reflects the continued volatility of uranium prices, although maybe not quite as much as you might expect. Confidence in nuclear power as a clean source of electricity is slowly but surely improving, leveling out these swings. 2. Brookfield Renewable. Yes, a second recommendation in this podcast. If you feel confident that renewable energy as an industry is investment worthy, but you don't know where to start, consider a stake in Brookfield Renewable Corp. With it, you'll own a little of everything the business encompasses. There is one detail worth pointing out there. That is, this is not Brookfield Asset Management, Brookfield Corporation, or Brookfield Wealth Solutions. Although all of these companies are related, Brookfield Renewable is the only one with direct exposure to the alternative energy market. The others are simply involved in the management and marketing of Brookfield Renewable. 3. First Solar. First Solar stock is down nearly 40% from its June peak, largely on concerns that President-elect Donald Trump isn't as supportive of solar power as his predecessor was. And maybe he isn't. The solar tax credits that boosted the business under President Joe Biden's watch are anything but guaranteed to last through Trump's tenure. The irony is that the analyst community is still calling for strong growth from First Solar, regardless of who's occupying the White House. Last year's projected top-line growth of 29% is expected to be followed by 32% growth this year, followed by 21% revenue growth next year. Even producing half of that, anticipating growth should shake this stock out of its current funk and rekindle a long-term advance." End quotes. And yes, another analyst article on the renewable energy theme, but with a very different angle. It's titled, "2 Renewable Energy Stocks to Buy in 2025 and Hold for Decades," by Leo Sun on AOL.com. It was originally published on Fool.com. 1. NuScale Power produces the only small modular reactors that have been certified with the standard design approval from the U.S. Nuclear Regulatory Commission. Its small modular reactors can be installed in vessels that are just 9 feet wide and 65 feet tall, which makes them much easier to deploy than larger nuclear reactors. NuScale's modular designs are prefabricated, delivered, and assembled on site. That approach reduces the cost and construction time of a working nuclear reactor. Its current reactor clusters are certified for up to 55 megawatts of electricity. NuScale's stock has already surged nearly 650% over the past 12 months in anticipation of that approval, but it still trades more than 20% below its all-time high from last November. Analysts only expect its revenue to rise 4% to $24 million in 2024. 2. CleanSpark develops modular microgrids for wind, solar, and other renewable energy sources. These microgrids can be deployed as standalone systems or plugged into existing energy grids, and they're also used to funnel energy into storage systems, backup generators, and load management solutions. CleanSpark initially developed these green energy systems for other companies, but it evolved into a Bitcoin miner upon acquiring ATL data centers in May 2021. It upgraded ATL's mining facilities with its technology to boost their efficiency and demonstrate that it was possible to mine Bitcoins with low-carbon energy. From fiscal 2024 to fiscal 2027, analysts expect its revenue and adjusted EBITDA to grow at a compound annual growth rate of 36% and 22%, respectively. That makes it a great long-term play if you expect Bitcoin's price to keep climbing and the renewable energy market to keep expanding. End quotes. I have one additional article, not covered due to time constraints. Its title is Startup Bountiful Financial Launches Stock Indices Based on Religious Teachings and Believers' Real-World Experiences. And that was a media release by Bountiful Financial. So these are my top news stories with the best stock and fund tips for this podcast, best low-carbon ETFs and stocks. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these terribly troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next February 7th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY ethical sustainable investing pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, Any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon, and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.